Hey everyone, this is Ali and Ming from Volition Properties, and we're here to chat real estate, sharing tips, stories, and strategies. Today we're going to talk about, Toronto, being a buyer's market right now. Prices are soft, inventory is up, and sellers are motivated. Sounds like a perfect time to buy, right? Well, not always. Well, let's dig into that a bit further, Ming.
Yeah, I mean, like, I'm sure you've heard it from everybody, not just us. It's very much a buyer's market right now. So you want to buy, right? It's a buyer's market. And truthfully, not most, vast majority, 89% of our clients are buying right now. But there is that 11% where it doesn't make sense to buy. And that's what I want to talk a little bit about today, because I think it's easy to get swept up in the you should be buying right now, but there are times you shouldn't be. So let's get into some of those reasons. The first one I'd say is where you need to sell your home in order to buy the next property. It's a soft market. So when you go to sell, it's going to be difficult, especially if you fall into one of these two categories, one being a condo. So let's say you must sell your condo in order to buy a house. Let's say you want to upgrade. That's going to be very difficult and you're going to take a hit on it. Now, it may still make mathematical sense, and during advisory sessions with our clients, this is what we do. We kind of help them crunch the math. It may still make sense to take that loss in the condo to buy the home. But no, even if you're taking the loss, it may be a very difficult time still to sell that particular condo, especially if you're, out in the suburbs. You have a condo in the suburbs right now. They're even worse than condos in the downtown. So that's one. If you are going with that strategy, upgrading your home, I would sell first before you look at buying and try to get a extended closing, 60, 90 days to give you time to go buy the new property. Number two, your employment or potential unemployment is in the cards for your future, right? So with this slowing economy that we're seeing, and therefore, better housing prices, if your job security is at risk, don't buy. I hope this is obvious, but there are some people I think out there who may have this higher risk tolerance, but you really don't want to get yourself in a position where you're committed to a higher mortgage or a mortgage at all, even if the deals are great, right? Because that can also lead to financing risk, right? That's called financing number three. Pre-approvals are based on your current situation and they're not guaranteed. Should you have a change in your financial situation from the point that you have an accepted offer to the point of closing, and you're now unable to close, not only will you not be able to close on the property, you may be in breach of contract and potentially get sued in the process. So you could be hit double. Be very aware of that. You should have some faith in your employment if you're going to buy now. Remember, buyer's markets are a shift in risk back to the buyer. It is more risky for a buyer. That's why it is a buyer's market. If the risk sat with the sellers, it would not be a buyer's market. Lastly, I'd say that none of us have a crystal ball. Even though the market's been low, some places recovering, but some places continue to go down. We don't know if we're at the bottom. We don't know if the current economic or slowing economic situation is going to continue to impact the market, or our price is going to continue to go down, or if we hit the bottom. We very much take an investor approach when we're looking at should I buy, because the numbers need to make sense now in this point in time. We can't really predict the future, but if it makes sense now is the time to execute. That makes sense in a declining market and an improving market, right? The numbers need to make sense in that time period, and then you do sensitivity analysis essentially to adjust for changes. But money is made, whether you're living in it, whether you are renting it out, over time, right? So the most important thing is to be able to hold this over time, to have cash flow. It's an investment property, which right now we actually have cash flowing properties, or if it's a personal residence, for you to be comfortable with that mortgage payment over a period of time, to be able to weather the changes.
I really like that acronym you have, and you use it quite often, is time, right? People try and time.
Yeah,
Yeah. So you want
Yeah,
to
we
share
use
that?
this acronym called TIME, TIME, tenant, investor, market, and estate risk. We have a whole long video going through how we evaluate risk at Volition on the acquisition of a property, be it personal, be it investment. But that's the framework by which we look at how and if and when we should be buying a property. And you may fall into that 11% of our client base, which it doesn't make sense for them to be buying. Those 11% are selling properties, and they're even in a buyer's market, it may make sense to sell. Overall, I think that yes, there are opportunities today, but it really depends on your individual situation whether you want to buy or sell in this kind of market. That's really what we pride ourselves on, is giving tailored individual advice based on your financial situation on whether or not you should be taking action or action at all. So hopefully that's helpful.
Yeah, and I think if you want more clarity on whether now is the right time for you, I would say book a call with us and, you know, And our advisory sessions do go through a case by case on a case by case basis, right? So for your individual situation.
Yeah, absolutely. Anybody that gives blanket advice on anything financial is not considering your situation.
Yeah, great. Well, we appreciate you hanging out with us today at Volition Properties. And if you got some value today, share it with a friend. Stick around for more real estate insights. And until next time, keep hustling and keep learning more about real estate.
Awesome. Thanks, guys.